are doing exercise 711, and it's going to be aging the receivables, and we already pointed out, we didn't turn the recording on right away, folks. Anyway, we already pointed out that balance forward is 700 has a payment against it. Look at the payment side, cash receipt side, credit receivables. You see there's one that relates to the balance of 155, and that's it. So there is still 545 not collected, which it was suggested maybe we should write that off. And maybe we should try to collect it, right? Last ditch effort and give up. So over 1 year, if you're aging, how much? 500, what was it, 545? Okay, yeah, so I've got a category, huh? And then I'm going to do categories of current, 30 days past due, 60 days past due, whatever, okay? We don't know what their terms are, do we, though? Let's make a big assumption. Let's assume that their terms, well, I don't know, maybe we could tell when their cash payments come in. When did they pay invoice 1710? See the first invoice there? $1,100. There's a payment of $1,100. 8 days later, what do they got? 10-day terms. But then the 314 one got paid when? 4/2. So I don't know. That was 15, 16, 17 days. I don't know what their terms are. Right? So maybe we'll just do 30 days, 60 days, 90. Sound okay? They didn't ask for it, but usually you tie to the terms, right? They have 30-day terms. How many are current? Okay. So anyway, what do we want to do with the 1710 one? Nothing. They paid it. What do we want to do with the 2116 one for 1,350? Nothing. They paid it. What do you want to do with the 490? Have they paid it yet? There's a September 5th one. 3614. Oh, it got paid on September 20th. See it? 790, and that's part of 2412. Really? So they paid 2116 and part of 2412. Did they pay the rest of 2412?
See, they paid 1,000 and 790.
Oh, there's 1,000 before it. Oh, so they paid that one already and out of order. And then, so what's 790 less 490? 790 less 490. That's, they paid all of 3614.
No, it looks like they over.
Well, it's 300 more. It's 300 more than 3614. So that's 300 more against 2412. See that?
But didn't they pay part of 3614 on the 921? So did they pay 300
Yeah.
490?
Actually, it's all of it. It looks like the cash on the 920 is paying all of 3614. So that 790 paid all the 490.
Okay.
And then they paid another 300, which goes back to the 2412.
Okay.
And they'd already paid 1,000 of the 2412. So how much of the 2412 is left? 1710 less 1,300, 410 from April 12th, right? An April 12th invoice. You could write down the number if we wanted. There was how much of it left? What did we say?
410.
410. So I got two categories, right? One from the beginning of the year and one from April 12th. Okay? You guys with me? It came in two payments, and one was lumped with other stuff. So then we look at, let's see, 4912. Did it get collected?
On 1031.
Yeah, that's been collected in full. How about 5681? They collected 1250 of it, so there's one from November 18th of 750 they have not collected, right? You guys with me? And then they collected 6347. So it's another 750 from November 18th. And that's probably current, don't you think? Pretty current. December 31st, fairly current. And how much did I just say it was?
750.
Okay, and what's my total accounts receivable? Just all those debits less the credits, but it would total up to us, wouldn't it? If we did everything right. That's all I do.
1705.
Okay, and then I'd say, what are your terms? If your terms are 10 days, they're all bad, right? If your terms are 30 days, they're still all bad. But the last one's not as bad. This one's not horrible if your terms are 30 days, but it's still, if you're in December 31st. So I don't like any of them very well. I think you should follow up on all of them. But obviously, that's a bigger problem. That's not as big a problem. It's still back in April, right? This is from last year. This is from April. It's now December 31st. This one's not such a big problem. Got more chance of collection. I think that's it. What else can you do with it? Glad you're working promise. So it's good. Just stay over that, huh? So what else do you want to do? Got any notes? You like to do? Would be useful to do? What exercise number was it again? Exercise
7-11.
7-11. What else do we have? Keep bad debts in your journal entries. How do you do sales, gross, net? You do bank reconciliations. We could do accounts without account. We could do factoring and assigning.
Can we do a factoring problem?
Let's do with recourse and without recourse. You know, kind of.
With recourse is when they can come after you, right?
Yes. Without recourse, they can. Okay. So let's do 717. And then we'll do without recourse. And then we'll change it a little bit. Exercise 717. And then we'll change it to be with recourse. Okay? So we'll just use exercise 717 to get some numbers. Okay? Exercise 717. All right, and what we want to do is we want to record the entries on the factor's books, factoring company, and on the company's books, the company that is factoring the receivables, right? Okay? And what's the date of our journal entries? When do they factor? Say?
July 1st.
7/1. Okay? So we're selling our receivables when we factor, right? Assigning is borrowing money, factoring is selling. Okay? So the company is going to do what? They're going to get cash. So I would debit cash from you guys. And they're selling their accounts receivable or their notes receivable, so you would credit either accounts receivable or notes receivable, wouldn't you? Okay? And then the factor is going to charge us, right? And what are we going to call that? They're going to charge the percentage of the receivables to factoring with us. That's our, right? We sold these. Loss from factoring. Okay? Factoring loss. Something like that. It's a loss on the sale of receivables. You like it? How about that? Okay, and then what else might there be? To the other side. They have an account receivable. They'll debit the receivable because they don't belong to them, right? The factoring folks. They're going to credit cash because they're paying out the cash. But they're not paying for they're not giving the full amount because they're going to have that loss on factoring, which is then is going to be revenue from factoring, right? They call it financing revenue. I like it factoring revenue better, something like that. Okay? Different companies use different names. Okay? But that's not everything, right? Because aren't they going to keep a reserve too? In case they don't collect the full amount of receivable, right? They're deducting that too. And that is going to be payable to the company. Let's use the terminology the author uses because I kind of like it. To company. To due from. It's just exactly equal to each other. It's a payable for one and a receivable to the other. right? So we'll call it due to the company, whoever it is that factored it with us, right? This company over here. You guys staying with me? And then what'll it be on the other side? Due from the factory. This would be a good one.
Can't you just use like receivables and payables for them? They payable
If
to
you call it
company.
factor receivable, factor payable, yeah.
So like factor.
Payable to company. You wouldn't say account receivable, account payable.
Yeah.
Yeah.
But I mean, like use the
Yeah,
term.
yeah, you could use the term receivable for yard. But I think due to, due from is more common. Okay. So probably better. Clear that you know that you're not dealing with regular receivables and payables. Does that make any sense?
Mm-hmm.
All this stuff is really flexible. Everything you do in accounting is really flexible. Okay, so how much? How much receivable was it? Be factored.
300,000.
That's your 300,000 for both of them, huh? And this one, whatever's factored is what you sold, right? It's not more like with the assignment, where they're having collateral, right? Okay, and then what kind of fee are they charging? What's the factory fee?
Financing.
Yeah.
Finance charge of 1.5%.
Okay, so this loss is going to be 1.5% of the 300,000, and this revenue is going to be 1.5%. Everybody good? All two of you? Okay. So 300,000, that's 1.5% is what? 4,500? Gosh, you gotta get some
Yeah.
more in your head.
4,500.
Move the decimal over two places, it's 3,000, 1.5 times is 4,500. Okay, so 4,500. People are gonna make fun of you, right? All right.
It's our generation. Our calculators are crunch.
Yeah.
They're crunch.
Ours too. It's too
No
annoying.
worse.
Always need one.
I found it odd that those you still use like the enormous.
You know, that's kind of cool though, because I realize you can't really have a good finger
That's what you
placement
saw.
on this.
Yeah,
but
that's crazy.
You can't.
Yeah, you'll never
You need
use a calculator like that again once you're on the road.
Really?
You're gonna have a full hand. I have a keyboard that I plug into my computer that has over on the end of the keyboard a 10 key.
Was there
That's how you do all your inputs, and then you can still use Excel and stuff. You just you got a calculator. That stupid little calculator thing they have in your computer, it's that ridiculous
started
thing.
using it one time. I found my calculator in the car. I started to do it. I was like, this is even slower than my calculator.
Yeah. Well, I don't know why they don't do a whole 10 key where you just put your hand. They probably have a program for it, right? Where you just have it on your screen, put your hand on the screen, type on it. For good ability to do that. Actually, I do have one on my Kindle. Not quite big enough to go.
Did she drop the class?
She had a family obligation.
Yeah, definitely. Severe illness. Okay, so what was the other thing they had, DW? There's a reserve, right? The reserve is they're holding back some money in case they don't get the whole 300. What percent was that?
It might be the 4% because it says the amount of accounts receivable and retained is amount equal to 4% of accounts receivable to cover sales, discounts, returns, and allowances.
Yeah. And so they're going to cover the sales, discounts, returns, and allowances. Now we're not, right? But we know that. Okay. So they could keep 4 just for bad debts if they want. Is it also for bad debts? It doesn't say.
It didn't say bad debts.
Okay. Sales, returns, and allowances.
What allowance would be like allowance for doubtful accounts?
Oh, it does say allowances.
Yeah, it said
Okay, sales, returns, and allowances, and allowance for doubtful accounts.
Well, it just says allowances. It doesn't say allowance.
Yeah, it could be. Yeah, okay. Anyway, they're going to eat all that stuff, I guess. Okay, so due from factor is 4% times 300, or what, 12,000? That's 12, right? Due to company, 12,000. So how much cash is going to change hands? So it's 300 less 12,000 less 4,500, huh? How much is that? What?
283.
283. My bad. 5 bad.
383.5. debits have to, my credits will have.
Yes.
Yeah, you do what you want, I guess. I don't think anybody else will be able to follow me. You did, but yeah. Okay, so we've got that. Then what does it say happens? Anything, or did they just want that? Bill,
They want you to prepare the journal entry on July 1st, 2014 for JFK Corp. to record the sales of receivables without recourse, and then to prepare the journal entry on July 1st, 2014 for
that's it.
LBJ.
No, that's more. Okay. So that's, this is what, with recourse or without recourse?
No.
Without recourse. Okay, let's do 3 different payments. Let's try this. Okay, three different scenarios. So A is, receive, and we'll do it all in 1 month. Receive by the end of July, okay, by July 31st. So assume it all comes in July 31st, I don't care. And then they transfer the funds July 31st too. Let's say they receive the whole 300,000. The whole thing gets paid. Who's going to receive it, by the way? From the customers. Put it in the wrong column. Where should it be? Who's going to receive it? I sold my receivables to the factor. Who owes the receivable?
The factor.
Who's going to collect the money? The factor. So they'll receive it. Okay, so first, during the month, the factor gets 300,000. What would they debit?
Cash.
Yeah, even I can do that one. 300,000. Credit what?
The account receivable.
Yep, 300,000. What will the company do? Nothing, right?
So
They didn't get anything. They sold them, they're gone. Okay, then what will happen? So that happens all during the month. So then they say, oh, okay, great. July 31st, what should we do?
would they pay the due to company?
You bet. So they're going to pay how much to them?
12,000.
12,000. Because there were no sales returns and allowances, no bad debts, no nothing, right? Okay, no discounts. Okay, so it's full amount. So what would they do? They'd send them 12,000? And then debit what?
Due to
Yeah, this is too easy to believe if it happens this way. Okay? 12,000. It's gone, right? Things gone. Okay, and what would happen over here? Assuming they get it the same day. I guess they wire funds.
flip. You debit the cash and credit due from company.
Yeah, you got it. Okay, good. Let's change the scenario a little bit. Let's say instead what happens is there's sales, returns, and allowances of 3,000. Sales discounts of 1,000. And bad debt write-off, give it up, of 2,000. And they're done. And they collect all the rest. Okay? So how much would they collect? You know,
290.
drew it up 6.
294,000.
294, right? 300?
Yeah.
They owed them. So it'd be 294,000 for cash. Okay? Who gets the money? Obviously the factor, right? It's going to be over here on the factor side first. So what would you do? Oh, it's a little different, isn't it? What happens to the factor? How much cash do they get?
206.
4. Yeah.
Oh, 296.
6 less than that. Debit cash. So this would be a July 31st. It all happened in a month, right? Debit cash. As it happened, really, with each cash receipt they do it, right? 294,000 goes to cash stuff. What else do they want to do?
to,
How much accounts receivable goes away for them?
300,000.
300. Okay, so I got 6,000 to get rid of it.
They debit your bad debt expense.
Well, they don't have
debit
bad
the-
expense.
Debit the allowance,
They don't, no, they wouldn't debit the allowance. They don't have allowance.
since they wrote it off.
Because the allowance stayed with the people who factored the receivables. If they bought the receivables without recourse and they don't have a reserve, what are they gonna have to do? Set up an allowance, right? Yeah, but they don't have an allowance for it. The other guys would have the allowance
They
for it.
debit loss? No?
And it's not a loss for them, because it's being covered.
Oh,
What do they have? They have that due from,
Oh,
remember?
Yeah.
They have that due from here, or due to rather, of 12,000.
So
And the
you,
due through.
when you credit that for, or debit it for 6?
Yeah, you satisfied 6 of it because you found stuff, right? That's what that was for. So the due to the company, right, goes down by 6. Well, now what's the balance in due to the company?
6,000.
Yeah. So what'll you do? You gotta get rid of it, don't you? You withheld 12. You incurred 6 of costs here, right? Sales returns and allowances, sales discounts, and bad debt write-off. Okay? So how much are you gonna give them?
6,000.
Only 6. So I think I'll send them cash for 6, won't you? And what goes away?
Due to the other 6,000 of it.
Due to the company, it's gone, the other 6, and the deal's done from their side. What would you have to do over here? These are both July 31st, I guess, as an example. Could be the next month, of course, right? What would they have to do on the other side?
Do you do the bad debt expense and the discounts and returns?
No.
No? Would you just debit the cash?
What did I do when I sold the receivables? What did I debit? Loss on factor.
Loss on factor.
So really what happens is I have what? More loss on factor. Most likely you do it this way. Your instinct's pretty good though, would be okay. I mean, you could go to against an allowance if you still had it, right? An allowance for sales returns and allowances, and allowance for doubtful accounts. You could go there if you wanted. Probably wouldn't want to go to sales discounts with it though. That's a bit of a problem. So probably you just go to loss on factor anyway. 6,000 and credit what?
Receivable from factor, or the due from factor,
Yeah.
due from company.
Due from company. That'd be the first thing. Although you might not find out about it until they only send you 6,000, right? So what's the second one when you find out about the 6,000?
Debit cash 6,000 and
Yeah.
credit the other due from company.
Yeah. So probably what would happen is I just debit loss for 6, debit cash for 6, and credit due from company for 12 in one entry. But you can do it in 2 if you want, right? If they send you a notice that they're only going to send you 6, you could go ahead and record the loss, get rid of part of the due from, and then record the cash when it comes in. But if they just send you the cash, you'd probably put it in one entry, wouldn't you? You guys agree? Debit loss and credit due from.
12,000.
Yeah, debit loss for 6, debit cash for 6, and credit due from for 12. Okay? It's easy, isn't it? Okay, so let's say, now this is without recourse.
Yes.
Okay, so now we've had all 300 come in. We had 294 come in. Let's say we only get 270. Okay? So this is scenario C. How about between sales returns and allowances, sales discounts, and bad debts, right? And we finally give up. We only collect, so that's why we're not collecting the whole 300, okay? We collect 280,000, okay? So that's how much they collect over here. What would they do? Debit what?
Cash for 3.
Yeah. Credit what? They're giving up.
Cash receivable for 300. debit the due to complete for 20,000?
Yeah, well, 20? Don't own that much, I only own 12. The company's only
Okay,
12.
so 12,000. Then with the
The
other,
most you can take out is 12, that's all you're protected by is 12,
okay,
right?
so then the other would be a loss, wouldn't it?
Yes. Lost to them, okay? Maybe bad debt expense, if they did set up an allowance, right? Maybe debit the allowance, okay? So maybe a bad debt expense on this, because they are their receivables, okay? How much is that?
8,000.
Yeah, it's either that or maybe a loss, okay? Makes sense? Okay? What would happen on the other side? What are we gonna tell them?
You wouldn't receive any money.
Tough luck, I'm not giving you anything. Yeah. They can't even have the receivables back until I collect my money, right? I'm not giving them back to them, okay? I have to collect how much before I'll give them their receivables back? 8. If I collect 8 more sometime, I'll give them their 12,000 receivables back. They can have them. That make sense? Okay. So what do I do? I can give them the receivables. I can't ever collect them. What do you want them to do? What do they have on their books, you guys? We gotta get rid of.
The due from.
Yeah. So I'm gonna have to do what to get rid of due from? Credit? Due from factor. How much?
12,000.
Yeah. And what are we gonna debit?
To be lost from.
Yeah, instead of a 6,000 loss, this time we have a 12. Their loss is limited to the 6,000. Right? You guys with me? Or 12,000, I'm sorry. The loss is limited to 12,000. Okay? All right, let's do exactly the same thing, only let's add to it that we are going to have, you guys have it all written down. Let's do exactly the same thing, only let's make it with recourse. So we had, what was it? How much was the fee, percentage-wise? Factoring fee?
1.5.
1.5%. The reserve, the withheld,
4%.
and then let's say they estimate their recourse liability. These are the people that are factoring at the company, right? Not the factor, the company. Recourse liability, let's say it's going to be $8,000. What does that mean? We think that we're going to be on the hook for another $8,000. Okay? We think we're never going to see the 8,000. Okay? Make sense? But are we going to tell the factor about it? No, because then they don't want our receivables. Okay? So, you know. All right? So let's do both the factor and the company. How much were the receivables? 300,000, right?
Right.
Okay. What will you do then at July 1st when you factor it this time? What changes?
Would your receivables stay at 300,000, but you'd add in the recourse as a liability?
You got it. So the receivable these guys are getting is 300,000 for the factor. The receivable the company's giving up is 300,000. So that's standard. How much cash changes hands? It doesn't change, right? Still the same cash. How much is the cash? We said 1.5% of the 300 was 4,500, and we said 4% of the 300 was 12, right? 16.5.
Yeah. So 283,000.
Yeah, 283,500.
And the factor recorded factoring revenue. They call it financing revenue, or sometimes even interest revenue. I don't like that because it's factoring. right? But anyway, okay, it's not interest. But how much is that? 1.5%, wasn't it?
Supposed to be
11.5.
Yeah. And then they had 12,000 of what?
due.
Due from company?
No, due to.
Due to, come on, due to liability. Due to company. Okay, so we got that. And that doesn't change, because they don't know about the recourse liability, right? We didn't tell them. So what does the company do?
They debit the cash 283.5, credit the receivable for 3, credit the estimated recourse for 8,000.
Oh, we're going to have the recourse liability here because we think we're going to have to, that we're going to maybe lose that, right? And we want to record it. We think we're never going to see that 8,000. So out of the 12 due to, which for us is they do what? Due from. So that's the same. Everything's the same over here too, except we're going to add that recourse liability. Due from factory. What's 12,000, right? And then what did we call the 4,500? Loss on sale. Loss on sale or loss on factory. Got it? It is a loss on sale. You sold your receivables. But wait a minute, that journal entry doesn't balance. How much am I out by? 8,000. What do I do with the 8? I don't think I'm going to be short the 4,500 that they're going to keep no matter what. I think I'm going to get nailed for what? 12,500. You got it. Okay? So this time, let's just say that they were keeping the 12,000 for, they thought they weren't going to ever see 12, maybe, right? That was their protection. Okay? And we recorded a recourse liability of 8. So let's collect all of it. Let's say they collect by July 31st the whole 300,000. What would each company do at July 31st? What do they receive by July 31st? 300 of what? Yeah, the payment of the receivables, so cash, right? And who's receiving it? Who owns the receivables? Factor. It's always the factor, right? On assignment, it's the other way around, right? It's the company. So what do we got? 300,000 coming in here, guys? Credit what?
Accounts receivable 300,000.
Yeah, absolutely. Then what would they do?
Then they would
Send them the money.
send them the 12,000.
Yeah, credit cash. 12,000. Because I received everything, right? I was protected by 12, but I didn't need the protection. So then what goes away because I sent them the 12?
Due to company.
Due to company's gone. So once you think your way through this, it's not a very big deal. Almost everybody misses them, but they're not a big deal. I mean, it's not once you see it. Okay, then what happens on the other side? Nothing when they receive the cash in the first place, of course, right? They're not their receivables. But they're going to send us this cash, aren't they? So what do we do?
Debit your cash 12, credit the due from company for 12.
We got it. Due from factor.
Due for factor.
Okay. Just getting rid of that thing. Okay? All right, let's change it a little bit. Let's say you got paid, what did we say, 784 before? Make it 784. So through July 31st, you got paid 730, what did I say?
784.
784. Is that what I did? No, it wasn't. 300. Where did I get that?
I was staring out there. I was like,
300.
700 kills.
They paid 6 less than that. I don't know where I got that number. 6 away to 294. God, fine. Okay. 294,000. That's bizarre. Where did I get that? Okay, so 294. Okay? If they get paid 294, what are they going to do? Of course. Debit cash. 294.
Credit the receivable 254.
Credit accounts, well, they're giving up. They owe 300, because they've collected everything they need anyway, right? They're only entitled to 4,500 of income here anyway, right? Okay? All right, and this is gonna be with recourse, right? So they go back after them. But what's the 6,000 gonna go to?
It's 12,000, wasn't it?
Yeah, it was.
They only need 6,000 to cover it.
Yeah, but they only need 6 there, so they're immediately then gonna do what? All these on July 31st. They're gonna give the company how much? 6 of that, right? The extra 6 they're gonna give to them. And then debit what?
Due from.
We got it.
Wait, it's other way. Oh, well, that's.
Due to
Active.
company,
Yeah.
I apologize. Due to. We got it. Right? Names are too familiar, or too similar. But anyway, yeah, and it's gone, isn't it? The due to company is out of there, right? And we paid them the amount of cash we should give them. What would they do over on the other side? What would the company do? What do they get?
Cash for the 6,000,
Yeah.
and then their due from company goes to the.
But that's 12,000, right? So what do we do with the 6? Oh,
Loss of memory.
additional loss? We already recorded the loss. Okay. That's it on the books. We already put it in the loss.
Debit your recourse.
Yeah, debit the recourse liability. But wait a minute, that's only 6,000.
2,000 down from the recourse liability.
I have 2,000 more in there. So what would you have to do? You could make it all one entry. It wouldn't have to be separate. The recourse liability, how much are you going to debit it for to get rid of the other 2?
2,000.
2. And what are you going to credit for 2?
Would it be a gain?
Well, recovery of loss that's within the same year, right? So you have I'm sorry, recovery of loss that's in a different year, which is like a gain. If it's in the same year, just credit the loss. So that loss up here,
Goes away.
for 12.5, 2 of it didn't happen, okay? So loss on factoring would go down if it's within the same year, or recovery of loss if it's a different year, okay? And probably it's in the same year. I mean, it's got to be out there, right? You like that? Let's keep going. Let's say that we had collected, let's do 292,000, right? They paid us 292 just to make it come out right, money. We guessed exactly right numbers. So in the month ended July 31st, the customer paid $292,000. So we were exactly right. We're 8,000 short, huh? Okay? So what would they do? Debit cash, how much?
292.
Okay? Then what? Credit accounts receivable, how much?
300.
And then what?
Due to company for 8.
Due from.
Due from.
Like
Yes, it is. Make it crazy. Due from company.
I feel like I'm gonna mess that up like
Eight
this.
thousand. Yeah, you gotta think, which one am I gonna do? Well, I get rid of this, right?
Yeah.
Okay. So that, oh, that was when I got rid of it before. I'm getting rid of this one here. So, when I debit, it goes away. Liability goes away. Okay, so now what do I do? What do I have left in due to company?
4,000.
4,000. So credit cash 4,000. Due from company.
That'll be due to.
Where is it due to?
Due to. they're giving a cash out and they owed it, so it would be due to.
We both need to do two.
I was right.
Wait, what?
What?
It is due to company because we owe them.
Right.
When we pay them,
Yeah.
we get rid of due to company.
Yeah.
Yeah. All right. Same here. Obviously, same here. Ah. Okay. Due to company. How much? Another 4. I got rid of the 12, right? What do these guys do over here?
Cash.
Debit cash. How much? 4,000. And then what do we have?
Credit your due from company for 8,000.
You're 12.
12, yeah.
The old 12 is gone, right? 12,000 was in there, what, right? I took the 12 out. I need 8,000 or something. What is it? What did I have for 8?
Recourse.
Recourse liability. So it says 12 is going away and this 8 is going away, right? Really the difference was 4, obviously, right? Okay, so 8,000 recourse liability is gone. You just have to remember to get rid of your recourse liability and get rid of your due to, due from. You got to pay. Okay? All right. Let's make it even worse. Now to make the point of, who's taking the risk now of not getting paid? What is this? This is with recourse, right? Who's taking the risk of not getting paid? I'm sorry, this is without recourse. Without recourse, who's taking the risk of getting paid? With recourse, who took the risk? The company that sold the receivables. Yeah, the factor was not.
Without it.
Now the factor. What's that?
So without it's the factor.
Yeah, without it's the factor. You got it. Okay. So now this will be the factor has the problem. So let's say that they have, instead of 292, they have 285. Okay. So on July 31st, they get paid 285, and they're going to give up on the rest of it. Okay. How is that going to work?
Debit cash 285, credit receivable 300, and then
Debit cash 285.
you debit a loss.
Credit, yeah. Accounts receivable is 300,000.
Loss for 15,000.
Well, no. There is a due
Oh,
to company.
Yeah, my bad.
Due to company, how much?
12.
It was 12,000, wasn't it? How much am I short?
3,000.
What's that?
Loss.
Loss. Okay. So now, what kind of a deal would this be? Again, this could be bad debt, right? Additional bad debts, or it could be loss on factoring, right? For us, loss of some kind. But it's reduction rate. Okay. Is that good? If you have an allowance set up for it, it'd be an allowance. Okay. Because you're doing a whole bunch of factoring with a whole bunch of different companies, your business different, so you estimate what's going to happen to you. Okay. Are we good? You could also just reduce your factoring gain if it's in the same year, right? The revenue from factoring. But you'd probably do it as a loss or an expense against the factory. Okay. All right. What would the other company do? The company that factored their receivables and sold their receivables. What do they have to get rid of?
The due from
Due from company. So 12's got to go.
cash.
They're not getting any cash. Nobody's going to give any cash. What else do you have to get rid of?
Recourse liability. Wait, no, you wouldn't have the recourse, would you? Since it was without recourse.
Oh, wait a minute. This was with recourse.
I thought this was without.
No, this is with. I'm sorry. We're backing up. We're switching around. This is with recourse, so it's not a loss. The loss was on the other one without recourse. This isn't a loss. What is it? I can go after them for the 3,000. What is it? Screwed that up. I apologize. What is it?
Recourse.
Oh, that 3,000. I'm going after them. So for 3, I can collect the 3 from.
Recourse receivable or
Well, due
due from
rid of the due to, and any excess is going to be a due from. Make sense? Okay, so what are we going to do on the other side? We're going to get rid of the due from the company. What else are we going to get rid of? It's the right numbers. Okay. What else are we going to do? We got to get rid of our recourse liability, don't we?
And you debit due to company since they owed them.
You got it. Credit.
Credit. Okay. I was assuming.
Because I owe them. I'm
you
getting rid of the receivable, and now I'm putting in the payable, right?
Yeah.
So this due to matches this due from. Just turn your brain inside out. So that's 15, isn't it?
Yeah.
That's the 15 shortfall. What else do I have to debit? I have something else in my books related to this. What do I have, guys? I had the due from, and I had the recourse liability.
So you would debit that for 8,
Mm-hmm.
and then debit loss on factoring for 7.
Yes. It was 8,000. Because I thought I was going to collect 4, and instead I owe them 3. How much additional did I lose? 7. See it? That one's kind of tough, isn't it? Okay, yeah, I lost the 3, right? The short, plus I'd only allowed 8 of the 12, so there's another 4. I thought I was going to get 4 in cash, so I have 7,000 loss. And it just keeps getting worse as it gets bigger, right? There's less and less left. Loss just keeps getting bigger. But if it's with recourse, what do we have? Who has the loss? The company. If it's without recourse that we were doing earlier, who has the loss? The fact ends up with it in that same situation. Right? There it is. Okay? See it? I won't give you all that on one question, of course. You know,
But for the test.
so we could have them. Yeah, maybe on the test, do a take home. That'd be a fun one. Okay. Got it. And on the CPA exam, they do some weird things. I've seen it before. They have some, geez, are you kidding? Got all this stuff. Just knowing what it is, just, you know, they wouldn't be too picky on the accounts because somebody's used everything.
So on the CPA exam, would this be like a short answer question?
Yeah, maybe.
Okay.
But it could also be multiple choice questions. You know, pieces of it.
I really prefer short answer over multiple choice.
Yeah, me
I
too.
mean, yeah.
More, you can show them what you know.
Yeah, I feel more positive when I do that. Multiple choice, you get the one answer, you don't know if it's right.
Okay, so let's do something else, huh? That was fun. You want to do assignments both ways, where the company assumes it and where the company collects that borrowed the money, or where the bank collects, both ways?
Sure.
Let's grab a that's probably the most difficult thing in the chapter is to switch without recourse. Probably. Many times. Signing accounts receivable 713 maybe. Good anyone. Says Rashid Company assigns 400,000 receivables for a 200,000 loan. Oh my, twice as much. The assignment agreement calls for Rashid Company to continue to collect the receivables. Third National Bank assesses 2% up front and then 10%. Did we do this one class?
Not this one, but I think there may have been one
One
like
sounded
in the book that
Oh,
was
okay,
similar.
example in the book. Okay, that's
Yeah.
Oh, that's right, it was in the
PowerPoint.
PowerPoint. Okay, prepare the entry for Rashid Company, prepare the journal entry for Rashid's collection of receivable, and then note that Rashid paid Third National Bank. So let's do the journal entries for both companies. Let's do the bank and for the company, okay? Same sort of a deal. So this is assignment. And the first one is the company will collect the receivable, okay? So in the company's books, Rashid in that case, we'll just use their numbers there. The company and the bank. Okay, right? So what do we want to do? What date was it?
April 1st,
Okay.
2014.
All right, and what's going to happen is they're going to borrow money, because they're borrowing, right? This is borrow, not sell your receivables. This is borrow against.
So using them as collateral.
We're using it as collateral, but we specifically assigned it to them. So when we collect the money, we have to give it to them. That money is theirs. Does that make sense? Versus if it's just collateral for the debt.
Then they need to claim it if you don't pay them back, basically.
Yeah, if you never pay them, then they can come and take your receivables, right? And then you can go to court and get them. But here, you guaranteed them.
Okay, so
that you're giving them.
as you're collecting, then it goes to.
Yeah. And two ways we could do it. Either the company can borrow, or you can have your customers pay the bank. If the bank doesn't trust you, they're going to have to pay them. That makes sense? The money goes straight in. So, all right. Anyway, so on April 1st, how much did we borrow? Let's see. Our note payable, and therefore the bank's note receivable, is going to be the full face amount of the note. Would you agree with that? It's borrowing. It's not factoring, not selling. How much is the note payable? How much we borrowed? 200 grand, was it? That's what it was, right? And then it was 400,000 of accounts receivable that we're tying up, right? So it was 400,000 of accounts receivable is assigned for a $200,000 loan. Okay? You guys good? So the note payable or note receivable is 200,000. What's the fee going to be? What percent was the fee? The bank fee? 2% was it?
Yeah, 2% finance charge.
Yeah, wow. Okay, 2%. And what is that 2% going to be to us? It's interest, right? Interest expense. And then they're charging us 10% interest in addition to that, right? So they already got us for $8,000. Wow. Okay? We're not a very good credit risk. Okay, and then on the note receivable, what do they have? Interest what for the bank? Revenue. Good. Okay. So how much cash changes hands? 192, is that right? Okay, this is pretty straightforward. The thing to remember is the fee is going to be based on the full amount of assigned receivables. Okay? Now, if you want, and what we're doing here is we're going to have the company collect. Okay? Say, in this example, let's say the company collects the receivable. Collects cash on the account receivable. Okay, that's the first one we're doing. Okay, now one other thing you could do also at April 1st, and I like this, by the way. I think it's a good disclosure. You can either put in the notes to the financial statement that you assign these receivables, just like a collateral note for a regular note, right? The receivables are collateral for a regular note payable. Okay, or you could actually reclassify, which I like better. And what you do is you credit your accounts receivable for the full $400,000, and guess what you debit for $400,000? How about assigned accounts receivable? And what that does is it sends the message right in the face of your balance sheet that your receivables can't be used for anything else. Right? You collect them, they have to be paid. That cash has to be paid to somebody else. And I put the whole 400 in there because I signed the whole 400. I can't use them as collateral for a loan or anything.
So on the balance sheet, the signed accounts receivable would be on the face of it?
Yeah. Mm-hmm. Or it could be in the notes, you know. But I kind of like making the entry. What would happen on the bank side? Nothing. They don't have any receivables, right? Okay, so you could do that. If they use an assigned account receivable account, you would, right? They tell you that, no problem. Okay? So then, let's say we collect all of it. Is that what it says in there? What does it say in the problem? What exercise was it, by the way? Exercise
713.
713. Folks at home. 713. Okay. So, how much was collected? say, or they just want you to do these entries?
The instructions: A, prepare the April 1st, 2014 journal entry for Rashid Company. B, prepare the journal entry for Rashid's collection of $350,000 of the accounts receivable during the period from April 1st, 2014 through June 30th, 2014. And then C is on July 1st, 2014, Rashid paid Third National all that was due from the loan it secured on April 1st.
Okay, so they borrowed this money for how long? So through June 30th, they borrowed this money for 3 months, didn't they? April, May, June. It's 3 months. How many months interest are we going to have, obviously? 3 months. So that's a little tricky, huh? Okay, so it's all 3 months. So every time they gave us the cash, we could record this, but in total for the 3 months into June 30th, how much debit to cash are they going to have? 350? Okay, and what are you going to credit? Accounts receivable, which ones if I put them in this assigned account? The assigned ones, right? If it's a regular receivables, it's credit accounts receivable. If you're using the assigned account, you'd go to assigned accounts receivable, wouldn't you? That make sense? What will the bank do? Nothing, right? They don't have an entry, do they? They didn't get anything. Okay, then what are we going to do? Also probably on June 30th. Or did they say what date we sent the money to the bank, or did they even say? Even tell you you're going to.
July 1st, Rashid paid Third National all that was due from the loan secured.
Okay, so we're doing it July 1st. So we're paying them, and let's assume that we do a bank transfer so they get it immediately. Okay, how much are we paying them? Compute it. We're going to pay them with what? Cash. And we're paying off what? What are we paying the bank? We owe them a note payable, and now we're paying the note payable. I think the note payable is going to be $200,000. Plus, we are going to give them what? Interest, which will be interest what for us?
Expense.
Expense. Excellent. How much is that going to be? What was the interest rate?
2% finance charge.
Yeah, plus interest at
10%.
10%. But it's only for 3 months. So what, 2.5% worth of a year? 10 divided by 2 is 5 divided by 2. 10 divided by 4. Yeah, okay, it's 3 months, right? But it's 2.5%. Would you guys agree with that? Take 10 times 20,000, right? And then take 1/4 of it. There you go. 10 times 200,000 is 20,000, right? Divided by 4, it's 5,000, isn't it? Aren't you giving them 5,000 for interest? The world I live in, I'm going to do that. Okay? Because they're going to make me do it. Okay? So what would the bank do? $205,000. What would they credit?
Interest revenue.
Yes! Fantastic.
Credit the receivable for 200.
I think so. The note receivable goes away for 200. Okay, good, guys. Just let yourself think and you can figure all this stuff out. Of course, when you go to work, you're going to figure everything out. All right, there's one more thing. Let yourself think about it. What do I want to do?
There's still 50,000 in assigned.
Yeah, I put excellent. I put 400 in. I only took 350 out. It's no longer going to be assigned. I paid off the loan, didn't I? Did you see it too? Okay, at least you do now. Okay, what would we do?
Credit 50 and then
Credit assigned accounts receivable.
debit accounts receivable.
Yeah, because now they're just regular receivables again. Excellent, guys. And you don't have to do the assigned accounts receivable unless they ask you to, right? If they don't use an assigned account, you would have it at all. I don't know. I do either way. Okay.
You said you like it, so.
I think it's a nice idea. It's a good, nice disclosure. What would the bank do with that? Nothing. Okay. You guys good? Okay, let's do exactly the same problem. You have it written down, you know my memory, I won't know what we did. Okay, let's do exactly the same problem, only let's say that we assign it. And we also ask our customers to pay the bank, as the bank doesn't really trust us. Okay? Actually, some companies have the bank collect their money anyway. When I was at, or some businesses have the bank collect the money anyway. When I was a student at the University of Oregon in my PhD program, I actually sent my payments to University of Oregon, which I thought was just bizarre. I mean, they're both big schools. University of Washington is much bigger than University of Oregon, but they're, you know, Oregon's 20,000 students or something. Washington's 50. They're big schools. And what is this? I'm seeing this. Seattle to UW. They collected for them. They collected all their tuition for them. You send it to them, and they processed it for them, I guess. It was weird, but you do anything you want, right? Okay, so the company and the bank. And this time, what we're suggesting is that the bank collects the account receivable. Okay? What would be your journal entry? What was it, April 1st?
Hello? Yes. Hello?
And what do they want?
Face
It's
to
still
face
recording. I don't know what happened. Or it started recording again.
I had a phone interview with him last Wednesday, I think.
Uh-huh.
And they just called for a face-to-face interview next Friday.
There you go. Good deal. Here it is. I'm going to waste time on it. You know, unless you consult.
I don't do that.
No. I mean, you go lunch with people, don't pour your food on them. Yeah.
Big fight in the middle of it.
Yeah. Okay, anyway. So what would we do? The bank's going to collect the receivable. So first, let's record the loan. How would you record the loan? The company gets what? This is too easy for you.
Cash.
Cash. And how much they get? The note payable is how much? My last one?
Well, you got 192.
It was 200,000, and you got 192. It's still going to be the same, right? Doesn't make any difference who's collecting receivables. What was the $8,000?
Interest expense.
Yeah. No change, in other words. No change. Okay? And then the bank would do what? At the credit card.
They credit their cash, debit the receivable, and credit interest revenue.
Yeah, absolutely. Whoops, that's 200,000. Okay. This is going to be 8,000. That's interest revenue. So that's exactly the same, isn't it? This time, let's not record the assignment of the accounts receivable, right? So you don't have those entries. But you could. They look exactly the same. Okay, exactly the same. All right. Now, the bank collects the cash.
350,000.
Okay, so by June 30th, they collect cash 350,000. Actually, as soon as they got up to the 200,000, they start sending it.
Well, how about the
200 plus some interest. 200 plus interest. Yeah. Okay. But let's go do it that way. That's fine. Okay. And what are they going to credit?
The note receivable,
You got it.
200.
And let's say they collected most of the extra 150. They collected the extra 150 the last day of June. Okay, so they didn't send it across. That makes sense. They collected that. This is a little bit weird problem because of that. They collected so much. Okay, so the note receivable would go down by 200,000. And what would they also need to do?
Credit interest revenue.
Yeah, interest revenue. Good. How much would that be?
8,000.
Was that how much it was? 200. How much
Or
was that? No, that's not that. What was the interest revenue? 5,000. Right? It's $5,000. See it? So it's still going to be 5, isn't it? Now I did it. okay, so, but anyway, it's the 5,000 interest revenue, right? And then what would be the rest, the other 145,000? And we're assuming that they got that the last day of the year, right? Or the last day of June. What would this be? Payable to who? To the company, right? I owe the company 145 grand because I collected 145 too much. Make sense? Okay, and then what would the company do? On July, well, what would they do on July 1st? They have to give the money, right? So payable to company. How much? 145. So this is simple. It's no big deal. And the 145 comes out of cash, right? So they end up at exactly the same place, either way. And then what would the company do on July 1st?
Debit cash 145,000 and credit receivable from bank.
No, they don't have it recorded.
Well,
They have a note payable recorded.
oh yeah, note payable, get rid of that.
Debit notes payable. Ah, for 200,000. So theirs gets tougher. What else do they get rid of? We never did record the receivables as
Interest
assigned.
expense, no.
We never recorded the receivables as assigned, so they're still in accounts receivable. So what would you do? Oh, you want interest expense? I like that. I heard that. Okay, I'll take it. Interest expense is going to be 5. So now what we've got is, there's the $350,000 that was collected, right? 145 plus 200 plus 5. Okay, we got it in. Now what? Credit what? What are they paying us on? They paid it to the bank, but it goes against our account. We didn't set up assigned accounts receivable, so we don't take it out of that. What do we take it out of? Regular accounts receivable. 350,000. And how much do I have left in accounts receivable if I start with 400 and they paid me 350? 50. Everything's perfect, right? That's just to make your life a little more difficult, confuse you more. What if they do set up the assignment on April 1st? What if they do set it up as assigned accounts receivable? They would have debited assigned accounts receivable, right? For how much? 400,000 was it? And credit regular accounts receivable for 400,000. You guys with me? Back from the earlier one. And then what would you do now? This wouldn't be accounts receivable. This would be assigned accounts receivable. But you know what? I don't want to just take 450 out of accounts receivable. 350. I want to take the whole 400 out. I put 400 in. Oops. I put the whole 400 in. I don't want to take the whole 400 out. But you guys? I need another debit. What is it? Sit and look at that a second. Remember what we did on the earlier problem? What was left in assigned accounts receivable we had to take out, and we put it into what?
Accounts receivable.
Yeah, it's exactly the same point. If you add up all these entries, everything's the same on both sides. The net effect is the same on both sides. What happens? We loan them the money and they pay us back, and how much interest are we paying? 8,000 plus 5 is 13. You guys agree? 8,000 plus 5 is 13. It's the same on the other way we did the problem too, isn't it? That's recourse liability. What did you do? There it is. Okay, the same thing over here. We had 8 plus 5. We had 8 plus 5. What interest rate did they pay? How much did they borrow? No, they didn't. They didn't get 200.
192.
They got 192. Both times they got 192, right? They borrowed 192. How much interest did they pay? 13,000. How long did they have the money borrowed for? So they have 13,000 total interest. That's the 5 plus the 8, right? How much did they borrow? $192,000, right? Because the 8 was taken out up front, discounted up front. What's 13,000 divided by 192?
7.77%.
But that's for how many months?
Is it
3 months. Take it times what? 4. What's the interest rate?
27.1.
You could answer that, couldn't you? That's kind of
Where's
fun.
the 13th?
8,000 up front, the fee up front, $8,000 fee,
Oh, plus the 5,000 interest.
plus 5,000 interest at the end. Yeah. So the total amount they ended up giving out was 13. Yeah. You guys good? People can structure business deals however they want, and they do. So should we do a bank reconciliation? Sure. They're so much fun.
Almost missed it from 101.
What?
Said well, I was missing that from 101.
You're missing doing bank reconciliation.
Yeah. Sarcasm intended.
You guys do problem 714 for me. Let's see if you get the same answer. Bank reconciliation. Yeah, that's probably all right. Or 713, it looks better even. Or 712.
Instead, I thought 713 was what we just did.
No problem.
Oh,
Oh, I was about to say it's
I was like, I'm
714.
not.
Let's do problem 714. Give that one a shot. You go ahead and work it. And then I'll try and work it.
Yeah, I was like,
Not a bank reconciliation. I guess I didn't lose any of that recording because it went back to
No, you didn't.
record. I tried.
Tried to lose it or tried to save it?
I don't know. Probably tried to lose it. This is a mess. Is it time for the Jews to leave Europe? In the Atlantic, someplace. And on NPR this morning, a lot of Jews are going to Germany to get out of Israel.
That seems.
Because they're afraid in Israel because it's getting so violent, even more violent. And they get re-elected their president, who wants to have war forever. You know, well, maybe they re-elected him.
Do you find it ironic they're going back to Germany then?
And that's something to save his price. The world keeps changing. That is something that, but they're not safe in France, where they defended them. Oh, computer.
there.
Not sufficient funds.
Close, but I'm just a little bit off.
How much are you off?
Huh?
Like,
Is it cool you can tell when you're there, Ken?
2,884. What are you getting for the bank balance? 47,647.89.
We have 4767
47647.
and 49563.
Yeah, I got that, but I deducted out the 1,915.40. Because it's like on their books, but they haven't deposited yet. So the bank would.
I already deducted that. Let me double check. 2, 7, 3, 6, 7. Okay.
at you guys.
I know. It's like 1,000. Make me really mad.
Okay, deposits in transit, how are you gonna do them?
The check's outstanding.
Yeah. Well, you got the checks outstanding and deposits in transit, both for you, so.
I think I'm missing deposit from trade.
Balance per book was, disbursements were, balance per bank statement, how much checks were outstanding, included with the bank debit memo, charges, bond interest collected, cash.
I don't think there is any deposit.
Balance, they had the balance of October 31st, preparing the bank reconciliation
For
when
November.
November 30th, so where'd you start?
The
November,
October.
took the
Take October, add the receipts,
takes
subtract the
minus the
disbursements,
disbursements.
then you compare it to the November bank statement.
Yep.
Yep.
So let's start there.
Actually, something so simple.
Balance per book. Balance per bank. You're gonna take the same balance for each. The bank they just gave you, right? How much was that?
56,274.2.
Okay, and then balance per books, you took the balance that they had at October 31st, added the receipts, subtracted the disbursements, right?
Mm-hmm.
How much is that?
50,478.22. Is that what you got?
Plus.
For books.
Start with the October 31st balance.
41,847. Add the deposits.
Subtract the check. Sound good?
Alright, I get that.
I didn't get that. Okay.
You got both of those? So you have both of those. Okay. Then it says the following checks were outstanding at November 30th, and we would have to see whether or not there were no other ones really, I guess. None from the prior months. Well, this is easier than I thought. When it's a problem, so there's got to be some twist. Okay, so I guess we'd add up check 1224, check 1230, check 1232, and check 1233, right?
I got 6,710.91.
Okay, where do you put the outstanding checks? Take them out of the bank or take them off the books? We wrote them, we knew about them, they're in our books. Yeah, so deduct outstanding checks. We can always look up the answer, we can't figure it out. How much is it?
We have 6,710.91.
710.91.
Mm-hmm. So I'm gonna double check.
Did you both get that? It's just those checks added together, right?
What was it?
1224, 1230, 1232, and 1233.
Correct.
Right number?
Yeah.
Included with the November bank statement and not recorded by the company were a debit memo for $27.40 covering bank charges for the month. $27.40?
So you subtract that out of the books, right?
Yeah, we're gonna make a journal entry for that, right? Everything on the books is gonna be a journal entry. Service charge $22.40.
2740.
Whoops. Get everything wrong. Okay. 2740 is going to come out of there. I don't know why I get those so close together. Oh. Okay, 2740. Okay, good. You got that one. We'll make a journal entry for that. Next thing it says is a debit note for $372.13 for a customer check return to March NSF. Now that check for $372.13 we would have deposited in our account, right? In our general ledger. We would have recorded as a deposit. The bank would have put it into our account, but then the bank took it back out because they found out it was back. It bounced.
Right.
NSF. So what are we going to do? We need to take it out.
Take it out, right?
Now, how much was it?
372.13.
Now, is there a fee with that too? Or is that included?
2740 bank debit memo, but That was just
I
charges
don't
for the
think
month,
there
that
was
wasn't a
another
fee.
with it.
Okay, so they don't have a fee. Usually there'd be a receivable and a fee. But you know what we're gonna do with the fee? We're gonna add the receivable anyway. We're gonna try and collect from our customers. Okay, and then later, I get that. Okay, we never get it.
I know.
Okay, customer check return to Mark NSF. A credit memo for $1,400. Now, this is a credit memo, so that's adding, right? Representing bond interest collected by the bank. And it was just bond interest, right?
Mm-hmm.
So 1,400. That's, the bank knows about it. They put it in our account, right? So it's in there. We don't know about it yet, so it's not out of there. Or not in there yet. So add interest collected, right? How much was it?
1,400.
So we got that coming in, okay? What else did they give us? Cash on hand at November 30th recorded and awaiting deposit amounted to $1,915.40. So I debited cash for it. I did.
It's already on.
We know about it.
We know about it, but the bank doesn't know, so it's cash on hand, sort of a deposit transfer, right? We haven't deposited yet. Today's deposit, I guess we could say, right? They'll deposit it before the day's out, which is really weird because we wouldn't have a bank reconciliation yet, so this is strange. But anyway, so it's held cash, I guess, right? That I've already recorded in here, which is a bit of a problem. I don't know that I want to add that to the bank, because I didn't send it to the bank. So what
So
is
we
it?
subtract it out of ours?
Yeah, and what do we reclassify it to? Cash on hand. Cash in bank. It's going to be a different account. Oh, that's a little twist, isn't it? How much cash on hand are we going to have? Bank doesn't know about it. We do, but we're going to take it out. So I'm going to deduct held deposit, right? That's what I'm talking about, that cash on hand, right?
Yeah.
I'm going to put it in cash on hand. How much was it?
1915.
Got it.
915 what?
0.4.
Okay, and it's going to be in a separate account called cash on hand, 1915.40, and I'd have to make a journal entry for that, of course, right? Because I have nothing in cash on hand now, I suppose. So what's the 54,878 plus 1,400 less 2740 less 372.13 less 1915.40? How much do you get?
49,563.29 cents.
49.
49,563.29 cents.
Okay, what do we get over here?
The same thing.
We're brilliant. How come you guys didn't work it out?
I added the 1,915.
It's included in that balance per books and it should not be there, huh? Write a journal entry for me. Fix it. Here's what you have in cash. Here's what you wish you had in cash. But you also need to get that recorded to the cash on hand. Make a big journal entry for that. Which of course would be on the company's books. You don't make a journal entry on the bank's books, right? They felt it kind of upset if you can't make a journal entry on your book. Yeah.
Totally.
Yes. Well, a little tiny twist, wasn't it? It wasn't as hard as it should have been. Oh well. Call it a problem too. It's more like an exercise. You guys still couldn't do it. And it's just an instructor to think of it. Good instructor to be able to do all this stuff. So are the Knights going to win the national championship?
I don't know, but the game was fun last night.
Yeah, I heard it was.
What was
that?
that? I think it's
What was the score?
81-72.
Good game.
Yeah, no, it was really good.
What was this team?
And they it was a good game. It was pretty much.
Is there one more? Is that it for this region, for the regional?
We're the regional champs.
So the regional champs.
And then
We lost our lead
Evansville
to the regional.
for the Elite Eight.
Okay.
Well, the remainder of the tournament will be held in Evansville.
We're starting with the Elite Eight, so there's 1, 2, 3 more games. There. Okay. Let's go up. Those guys.
And they had the little kid cut the net.
Yeah.
The little cancer patient who played in the game.
Yeah, I did see that.
Yeah, he cut the net. It was so cute.
I saw it on TV before the game. Okay, so here we go. What do you want to do with this thing? Journal entry. Did you do it yet? Just adjust cash from where it is to where you want it to be. Huh? And be sure to record the other cash account. Well, you have to anyway. Get there. It's terrible to tease us with that warm weather yesterday. Got it? What are you guys doing? It's only 1, 2, 3, 4, 5 lights on. Isn't it?
Yeah.
I think I would credit cash. I debit cash on hand. Cash in bank, cash check. I'm going to credit cash in bank, whatever the account's called. I'm going to debit cash on hand. I'm going to debit interest. Oops. Credit interest revenue. Assuming I haven't already accrued it. I'm going to debit service charge expense or miscellaneous expense, bank charge. And I'm going to debit accounts receivable. Yeah, 1, 2, 3, 4, 5. Ta-da! I guess if it was 1 and 3, it has to be the championship. 3 and 1 and 4 play. Earlier. Yeah. Seesaw. You guys done yet? Did your own do the balances? Sure it does. Ready?
Yeah.
How much you reduce cash by?
1915.
The difference between those two?
Mm-hmm.
191540? No, it's
Might
not.
have been the cash on hand.
49
I thought that's what
563
you were
29.
taking out of the bank was the cash on here.
No, the cash on hand.
No. I want to do 1 entry. Just 1 entry. I don't do 5 entries. It's a waste of time. I don't do 5 entries. Kind of a waste of time. So here we go. What do you want to do? Take 5478.22, right? And subtract 49,563.29. What's the difference? I want to reduce cash at the bank by how much? That's in your general ledger, right? 5478.22. This is what you wish it was. Credit cash in bank for how much? Less than 1,000, isn't it? 914.93. All right. How much is cash on hand that you want to have recorded?
1915.
And we have nothing in it, so we call it cash on hand, right? That's what it is. Okay. And your total cash and cash equivalents in your balance sheet is the same anyway, right? But it's not in your bank account. Okay, then what do we want to do? How about the interest? 1,400 is interest revenue, right? I know it's debit, cash, and credit interest revenue, but it's included in that 914.93. So is the increase in cash on hand included in that. Okay, and then we have a service charge of 27.40. Debit service charge expense, bank charge expense, something like that. And then the NSF check goes to receivables, doesn't it? 372.13. Add up the debits, add up the credits, make sure debits equal credits. Do they? No. Yes. Yeah, they do. Not each people. Gonna say something wrong. Probably so. Are they good?
Okay.
We're brilliant.